Hello and a very warm welcome to She the People. In our new series, Invest Her in partnership with BSE Investors Protection Fund, we talk about personal finance, we bring more clarity on important financial concepts, and we are also helping women be independent decision makers when it comes to matters of money. It is my pleasure to welcome Kiran Telang, a certified financial planner registered as an investment advisor with SEBI. Kiran works with clients across India and overseas and helps them in making smart investment decisions and simplifies their financial lives. Thank you for joining us, Kiran.
It's a pleasure, Mugdha. Thank you so much.
And we are talking, Kiran, today about risk management, a very interesting subject, if you ask me. For we are known as a risk-averse society, so definitely want to gain some insights from you on, of course, what is risk management, and then also come back to asking you about how women take risk management. How do they see risk management? But first, what are the processes? What is risk management conceptually?
So risk management actually is something, when you talk about risk, when you ask somebody what is risk, people will define it very differently. Some people might see it as an opportunity, some might be afraid, there'll be fear, some might see it as an uncertainty. So to every person, risk is very different. But when we talk about risk in terms of personal finance or investments, there is nothing which is actually risk free. So there is some element of risk. The forms might change, and the quantum of risk will change with every investment that you make or every investment decision that you make. But you cannot eliminate risk. So that is why it becomes very important to understand what is risk, how do you manage risk, and what is risk management all about. So as a definition, risk management starts with basically identifying what are the risks that you can face, assessing that risk, what is the quantum, how can it impact your life, and then taking steps to control that. So that is essentially what is risk management. So it sounds like jargon, but it's pretty simple. I mean, it's commonsensical that if there is a risk, you take steps to control it. Something as simple as, you walk on the road, it's not risk free, right? But you learn the basics of crossing a road. You look left and right and then you cross. So it's as simple as that. So let me just take you through a few aspects of personal finance and risk, and then we get on with our conversation. I think that's the way we'll take it. Uh, I'm not able to change the slide. Can we move on to the next slide? Yeah,
Yes.
thank you. So risk management in personal finance, I mean, what are the risks basically that you see? So we can divide the risk broadly into two aspects. The first is the personal risk, that is the risk that you as an investor or you as an individual will face. And the second part is the investment risk. So when you talk about personal risk, what is the biggest risk that can be faced? That is loss of income, right? Loss of income can come through various ways. It can come because of death. It can happen because of disease or disability, right? So these are the primary reasons why loss of income can happen. And loss of income will basically lead to having no money to invest. And when there is no money to invest, there are no goals that are being met or there is no corpus that is being created. So that is why you first actually need to take care of your personal risk, because that is where you are earning money and then you're investing. And when you're investing, then investment risk will come in. So that's why personal risk management comes first. In personal risk, I've also put longevity. Why so? Because now we are seeing that people are living to 90 and 100. You see so many super senior citizens around. So if you're
Right.
going to live that long, you need to have money to survive, right? Money is one of the critical aspects. I mean, there are obviously other things, but you need money to be financially independent and take care of all your requirements in old age, because there will be nothing else. You will have no salary. You will have nothing else to live upon. So you will have to depend on your investments to meet your longevity. Now, when we talk about the other aspect of it, when we talk about the investment risk, the critical factors are the top three, which I've written. Volatility. So volatility is something that we understand in terms of the fluctuations that happen in the stock market. So that is the commonest understanding of volatility. It is not that only equity is volatile, even debt is volatile, but we don't see it because it is not there on our screens every day, and it is not something that everybody understands. But there is volatility in all kinds of investments. Second risk is when you invest something and you don't get either the promised return, that is some interest or whatever has been promised to you, or you don't get your principal back. So the term for that is known as credit risk. When you hear of credit risk, there is a risk that the money that you're putting into a certain company or an institution is unable to pay you back that money on time. A lack of liquidity is the third most important investment risk. Now, lack of liquidity means, let us take an example. Suppose you put 5 lakh of rupees in a certain instrument, and you've kept it for, say, your child's college fee, and it is to be received by you on a certain date. Now, there is some delay from the company in giving that money back. So, that time you don't have that liquidity in hand, right? So, the money is there, it is going to come back in some time, but
Right.
you don't have it because of either the company being unable to pay you back, or because the date of maturity itself is later than your need. So you need it in 2022, but the maturity period is 2023. So you're not able to take your money back. So that is lack of liquidity. Obviously, inflation is there, that we see everywhere. Whatever cost rises happen. I mean, you go to purchase your vegetables, or you go for a vacation, or even for college fees, school fees, everything. The prices keep on increasing. So that is essentially inflation. Why inflation becomes important is because if you're planning for something, say 5 years down the line or 20 years down the line, or something like retirement, which could be even a longer duration, the money that you're imagining today, that same amount will not suffice down the line. So you will have to uh, put in the inflation factor into that money and save in a manner that your money grows in such a way that you have sufficient when you actually need it. Whatever time period is there, 5, 10, 15, 20 years. And investor behavior, of course. Uh, Now we have so many avenues to look at returns. We have so many portals available. We have so much on social media that is available. Because of these availability of information, sometimes our behavior impacts our returns in the portfolio, or it impacts the kind of wealth that we are able to create.
Hmm.
That is because we think that uh, X thing is better than Y, and we keep on changing what we are investing in. We don't give time to our investments. We eat into the compounding. So these kind of factors, play in. There are biases which come in. You see your friend or doing something, and you jump into the same boat without understanding what is the risk or whether it is suitable for you. So all these investor behaviors also are a part of the investment risk. Now, let me get into a little bit of detail about the personal risk part, which I spoke about. So, that risk can essentially be taken care of by insurance. So, in the terminology in finance that is used is transfer of risk. So, you're basically transferring your risk to an institution by paying them a premium. Say, for example, health insurance is something that you pay X amount every year, and if there is a hospitalization or if there is any ill health, you can claim back from the insurance company. So, this is one way of transferring your risk to an institution by paying a small amount of premium. Likewise, in life insurance or other insurance policies like critical illness or personal accident. Now, when we look at these four insurances, there are many, many more insurance policies that are available. But why I have listed down these four? The reason being that these should form essentially a part of any person's in personal finance portfolio. One, because health insurance is absolutely mandatory in terms, because the health maintenance costs are going up. Any hospitalization for any major surgery can cost you lakhs. So if you don't have health insurance, either from your employer or your own health insurance, in that scenario, you will have to dip into your savings and pay for that expense that has come up. Likewise, if life insurance is missing and if there is death, then the income from that individual will not be available to the family. If the income is not there, the future goals will not be met. The current expenses of the family might not be met. So there will be difficulties. So for that reason, life insurance becomes essential. Critical illness insurance is something that is not very commonly known yet. Now, why
Mhm.
critical illness insurance is important? What is it? Critical illness is basically a policy which pays you a lump sum on detection of certain listed illnesses. So there will be certain major illnesses which are listed, which are usually very high cost expense in terms of hospitalization and other things. So it could be cancer, it could be maybe a bypass surgery, or any such major ailment that will happen. So those are already listed. So on detection of any of those ailments, a lump sum is paid to the family. Now, how this helps is that because of the illness, that person will not be able to work. So you get leave from your work only for a certain amount of time. Or if you are a self-employed professional, you will not have an income at that point. So in that time period, this critical illness money that comes in will really help out. Personal accident insurance is another thing which people are aware of, but they don't know the nuances of it. So, personal accident insurance has three basic areas. First is the accidental death benefit that is given. So, in case of death by accident, the entire amount of the policy. So, if it's a 1 crore policy, the 1 crore amount will be given. The second is a disability benefit that comes in it. So, if because of the accident there is some kind of disability like loss of limb or a loss of hearing, so there is a certain percentage. So, suppose it's a 1 crore policy, say for a loss of limb, 25% is paid out. So, 25 lakhs will be paid out in case of loss of limb. The third aspect of this is basically income replacement. So, if you have to be out of work for a certain period of time, the maximum time limit usually is defined as 2 years. So, for 2 years, there'll be a weekly payout that will be made to the family based on certain criteria, obviously, which are listed in the policy document. So, these three aspects, are very important. So, in all, if you have these four kind of policies, you are kind of, secure about a certain aspect of your personal risks. They are taken care of. The other risk which I had mentioned earlier, if you remember, was the longevity risk. Now, longevity risk can only be met by investments. So you need to come to investments, and then we will talk about the risks in investment. Can we change the slide? So how do you manage investment risk? We all understand that there are risks in investment. So how do you actually take care of it? The simplest one is don't keep all your eggs in one basket, right? Diversify. So you cannot have just one kind of investment. You can't just have everything in equity. You just can't have everything in real estate or everything in bank fixed deposits. You need to have a mix of different kind of investments. Now, what is that different kind of investments? It will depend on several things like your risk profile, how far away your goals are, how much money do you have currently, or how much you'll need in your future. All these factors come together and they will give you your very, very customized asset allocation. So this
Right.
the term asset allocation is because there is diversification. There are different kinds of things. So how much of what will you have? So if you want to understand in a thali system, when we have vegetables, we have achar, we have some sweet. So what proportion? You can't have like too much of sweet or too much of achar in that. So there has to be a little bit of everything. So that will basically be your asset allocation. Second thing that we need to take care of is that you have to have quality investments. You can't have dubious selection of investments. So just because somebody is promising you extraordinary returns, you jump at that. There are obviously risks, why they are giving you that kind of returns because there is a higher risk involved. So look at the quality of investments that are there. If you select good quality, the risk automatically reduces. And if possible, take professional help because sometimes we are kind of blind to our own drawbacks. So sometimes we feel that we are doing the right thing, but we might not understand the entire picture. So just looking at one bit and being very good at it might actually hinder your progress. You might do much better if there is professional help. So don't hesitate in taking professional help if you feel that there is something that you don't understand. So I think broadly, these areas, taking care of these things should help create a better risk management framework for any individual. So Mugdha, this was my outlook on the risk management part. So we can have the conversation now.
Wonderful. In fact, when you were talking about all of these elements, the first thought that came to my mind was that we all do things, we all think about these things, we all plan for our future, but we never really know that the term for it is risk management. That you
Absolutely.
have to be, and that you have to be smart about your money, how to grow your money, multiply your money, but at the same time safeguard it from any kind of calamity that may come in the future. बट एज आई सेड किरण, जब हमने बातचीत की शुरुआत की थी कि हम इतनी रिस्क अवर्स हैं एज अ कंट्री एज वेल, जब हम अपने मनी को ग्रो करने की बात करते हैं, सो वी व्हेन वी आर थिंकिंग अबाउट investing that money in diversifying the basket and multiple ways of investing it, people like to be safe. They only want to keep their money, say, in a fixed deposit, or they don't want to take chances. Uh, have you noticed that in your work when you meet people, and how do we get out of that mold? Because classically we have been taught ki money ko save karo, but money should grow. So risk then becomes very important for your portfolio also.
Exactly. And what you're saying is very right, Mugdha. So people have this fear in mind that I will lose my hard-earned money, and that is the reason they don't want to take any kind of risk. But
Yeah.
as I said, you really cannot escape risk. So let us take an example. The simplest thing you can do with your money is keep it at home, right? So what is the risk there? The risk is that somebody might steal that money. So the risk still doesn't go away. There's a different kind of risk that comes in. If you select something like a bank fixed deposit, which is a very simple product, very easily accessible, and most people understand that. Keeping that money there is fine. But what is the risk there? The risk, obviously, the biggest risk there is inflation, because bank deposits usually give you a very low rate of return. Say bank is giving you 5%, your inflation rate is 6%. So you are actually 1% negative. And if you bring in the tax angle, you pay tax on that 5%, so it further falls down to 3 or 2%, depending on your tax slab. So you are having a gap of 3 to 4% in actually getting to your goals. So if you need something which is costing 100 rupees today, 10 years down the line, it will probably cost you 200 rupees. And your money will only grow to maybe 150 rupees by then. So where do bridge the gap? So that is the risk. So when you're thinking of investments, there is nothing which is no risk. So you just take the risk that you understand, take the risk that you're comfortable with. Also, on the other hand, have a look at, what if you do not take that risk? What is going to happen? So, like I said, if you need 200 rupees and you've just accumulated 150, what do you do? I mean, if you want to send your child abroad, you don't have sufficient money, what do you do? So what is the other option if your goals are not being met by the risk that you are comfortable taking? So there are ways and means of plugging that gap. See what
Right.
you're comfortable with and choose that thing.
That brings me to a very important question. How do you know how risky an investment is? Is there a way to calculate it? Is there a way of finding it out? What kind of due diligence goes in figuring out that where my investment is going? How do I ascertain the risk?
Great, that's a very nice question. I think the due diligence begins with who regulates the product. So, if there is any product that is being presented to you, first of all, see who is the regulator. So, there are four regulators in India. SEBI regulates anything that is related to the stock market, securities market. IRDA regulates everything that is related to insurance. Reserve Bank of India regulates everything that is to do with banking, and PFRDA, that is Pension Funds Regulatory Development Authority, regulates pension schemes. So basically, under them, there is only NPS right now. So there are these four regulators. So the first question that you can ask is, who is the regulator? So if there is no regulator for that, that means that is the first red flag. So there's something fishy about this scheme. So if there is no regulator, so if that is there, you just stay away. Second is you ask them what is a product similar. Say, for example, somebody presents to you a fixed deposit. Now, bank fixed deposit rates these days are around 6%, 6 to 7%. Somebody is offering you a fixed deposit at, say, 12%. So why are they offering you 12% when the banks are giving 6%? So there is some reason why they are offering you 12%. So that is the second red flag. So if your returns are extraordinarily good as compared to what else at a similar level is available in the market, that is your second red flag. So look at that, ask those questions. A third, when you are looking at different risks, I mean, look at also what you are comfortable with. So if you don't understand a certain product, keep asking questions about it. Don't sign immediately. So there could be very good returns promised, but take a step back, figure out, go and read. There are a lot of blogs available. There is a lot of information on social media. If you have a advisor, obviously you can go back to your advisor and ask about that particular product. Otherwise, do your research. Do not sign without asking questions, without understanding what you're getting into. I think these should be the basic criteria for selecting any investments.
Uh, Kiran, this is due diligence. This is what you can do to safeguard your investment and also experiment with something that you feel is likely to multiply your money. But risk management is also about taking calculated risks. So, how does one decide कि मेरा ये risk appetite है, मैं अपने portfolio का कितना हिस्सा कहाँ डालूं, और उसमें मेरा कितना परसेंटेज ऐसा होना चाहिए जिसमें मैं थोड़ा रिस्क ले सकती हूँ, और कितना ऐसा होना चाहिए जिसमें आई एम सेफगार्डिंग माय मनी. Is there a way of figuring that appetite for yourself?
Well, on a scientific way, there is a psychometric analysis which is usually available. We, as financial planners, do a psychometric analysis for our clients, wherein we try and figure out what is the risk appetite. Now, once the risk appetite is understood from these tests, we go on to see what is the risk required. As in, आपको कितना risk लेना चाहिए ताकि आपके goals meet हो. Why are we taking the risk eventually? We are taking the risk so that our money grows, right? तो आपको
Right.
कितने पैसे की जरूरत है, उसके लिए कितना risk लेने की जरूरत पड़ेगी. So you match the two. And then you arrive at what amount can be put in what instrument or what asset class. So that is when you go to a planner. But if you're trying to figure out yourself, I mean, if you don't go through the psychometric test, a simple way to figure that out is based on the time frames. So if you have something maybe needed in the next 1 or 2 years, you stick to asset class of debt, basically, which is not very volatile, very very short term product. So don't get into equity for 1 or 2 year period. So equity is something which you have to look at 5 year plus minimum, ideally 7 year plus, but at least 5 years. So that is a broad framework. For shorter terms, stick to debt. For longer term periods, go to equity. So and in between, so you can mix and match based on your requirements. So someone who's 30 years old and planning for retirement can go 100% into equity for that particular goal. But if that same 30-year-old is going to buy a house in the next 2 years, she cannot select equity for that goal. Then she will have to accumulate that down payment money into a debt scheme.
Right. We also hear of speculation or speculative risk. How do we look at that from risk management point of view?
So speculation, as the word itself explains, you can either be overly rich or you can lose everything. So that is speculation. So you can go to your gambling, your horse races, and things like that. So there are certain categories of investments which fall into speculative, gains. Even taxation it goes into speculative gains. So you have to be careful. I mean, see, there could be some mad money that you're holding. So out of a 10 lakh money that you have, maybe 50,000 is something that you want to try and play around with, and you want to understand new things, you want to learn. So you can use that money, but be mindful that that 50,000 rupees that you're utilizing for these kind of purposes might go down to zero, and be comfortable with that. Don't
Right.
put your entire corpus, whatever you've accumulated, into something which is, shaky grounds and something which is speculative.
Right. Before I go any further, let me also tell our viewers, if any one of you have questions, please punch them in. We are going to ask those questions to our expert if I have already not covered them. And just feel free to ask any question. This is your time with Kiran and on risk management. So don't think कि सवाल छोटा है, बड़ा है. जैसा भी सवाल आ रहा है ध्यान में, प्लीज आप लोग पूछ सकते हैं, और किरण को मैं वो क्वेश्चन पूछूंगी. Kiran, taking the insurance bit forward, and I saw there were types of insurances as well. Insurance को लेकर भी लोग conservative होते हैं, right? But insurance plays a huge role in risk management, as you said. Could you elaborate a little more on that? And also, why do people have a set mindset, when it comes to insurance?
Yeah, so insurance is something, people generally equate insurance with life insurance without understanding that there are multiple kind of insurances. So insurance essentially is, kind of, as I said, transferring your risk. So if there is a risk of economic loss due to some unforeseen event that might come up, you can transfer that risk to another entity. So at least whatever you have is safeguarded. So when you're doing this, see, people always, when they're paying a premium, they want some money back. So if you tell them that, okay, you're just protecting yourself against some unforeseen circumstance and you will not get anything back, it does not gel with the general psychology. So something like a term plan, which is like, if there is a death, then the family gets a large amount of money. But if it
And
doesn't happen, you
and
won't get that.
I have to tell you this, that a lot of times people say कि ऐसी चीज की इंश्योरेंस ही क्यों लेना जो कि हमें कभी जिसकी जरूरत ना पड़े, or you have those typical mindsets where people shy away from taking like health insurance or the critical insurance. So a lot of people will say, why do we call that bad omen, and why do we invest our money? And I've heard this so many times, and I was like, I have to share that with you.
Yeah, absolutely. I agree with you. So it is related to negativity. So people don't want that. It's similar to writing your will. People say कि will नहीं
Yeah,
बनाना है. So whereas
correct.
it is actually an important aspect of your personal finances. So जब तक insurance नहीं होगा, आप protect कैसे करोगे जो चीज बनाई है? And if you
True.
don't have insurance, जो पैसा बनाया है उसमें से लेना पड़ेगा आपको. और अगर वो
Mhm.
उतना नहीं बना है, I mean, if you don't have enough corpus and
Yeah.
something goes wrong, how do you manage? So you will have to compromise on your lifestyle, on your goals. That should not happen. That is the only reason why you're taking insurance in the first place.
When it comes to picking insurance, and I saw various types of insurance, and this is one of the things that even I'm keen to hear from you. How do you pick the right insurance for yourself? How do you decide what insurance is, say, relevant in your household or in your family? I do remember an instance where a friend of mine who has a genetic disposition to a certain illness, and there she had spoken to the health insurance people. पर वहां पर भी ये हो जाता है कि अगर किसी को पता है कि जेनेटिक डिस्पोजिशन है तो वो इंश्योरेंस दी जाएगी या नहीं दी जाएगी. And so when I looked at that critical insurance bit, that intrigued me. Could you elaborate a little on that?
Well, so critical illness, as I said, is not commonly, taken
Mm,
by people.
exactly.
And why this is happening is because the instances of critical illnesses are going up with the stress and the lifestyle that we are, seeing in metros and even now in smaller cities. The instances of things like cancer or heart diseases is going up. And if the primary income earner in the family has that kind of illness, then how do you manage? Because you can get only a certain amount of leave, and to tide over that period you really need that lump sum amount to be there. So I think that is a great way to ensure that kind of risk, and taking it at an earlier age. I mean, the premium also would be not very high. So I think with the kind of incomes people are having, that would be a good idea to go in for as an additional cover. Now obviously what you said is also important, that their resources might fall short. You can't have all kinds of insurance for a very high amount. You also have to look at the premiums that you're paying. So basically, I would say the health and the life insurance is absolute must. Start with health insurance, then take life insurance, and then if there is money available, try to stretch a bit and go for critical and personal accident. So these four should ideally form a part of your insurance portfolio that you have.
Got it. We do have some questions coming in, but before I go there, I wanted to also ask another question that is related with the investing in volatile markets, which is कि मुझे क्रिप्टो में बड़ा सुनने में आ रहा है कि पैसा बन जाएगा, या शेयर्स में भी मैं जाने की कोशिश कर सकती हूँ. A lot of times when you hear other people experience extreme highs in their investments, you are automatically thinking, all right, let's do this. How do you ascertain your risk appetite at that point in time, and how good is how good are these speculative markets?
Well, so first of all, you've bunched equity and crypto in one, which is not correct. So, like I
I know
said, it's
they're
very
two different things, but
yeah,
yeah, usually
yeah,
people get into it sometimes without having सोचा सोची में कि अच्छा उन्होंने भी
huh,
सोचा था और उनका भी आ गया, and
right.
without having mastery over the subject.
Yeah, no, so that is actually, there is a term for this kind of bias. It's called herd mentality. So because
Ah,
everybody else is doing, there must be something right in it, and let's jump in. So it
absolutely.
might not be correct. Sometimes the crowds are wrong also.
Okay.
So understand first of all that what kind of risk, as I said, what kind of risk are you comfortable taking? So like in cryptos, first thing which I mentioned, that who's the regulator? There is no regulator for crypto. So it's an unregulated product. So that is first red flag. So are you okay? If something goes wrong, you don't have anything to fall back upon,
True.
right? Now, second thing is, what if all the money is wiped out? How would that impact you? Are you okay with the amount of money that you're putting going down to zero? If fine, then you look at things like these unregulated products, say, for example, crypto. तो क्रिप्टो पे टैक्स लग गया है, लेकिन रेगुलेशन अभी तक आया नहीं है. दैट इज स्टिल ऑन द एनविल, सो वी डोंट नो व्हाट विल कम अप.
Right.
Other things like equity is a very widely studied field. There is a science behind it, and there are a lot of nuances to investing in equity. There are various methods in which you can make money in equity. तो आपको क्या suitable है? I mean, you'll have to do some study, or you'll have to take help of a financial advisor to understand what is your comfort level, what is your requirement. As I said, risk appetite and risk required to reach your goals. इन दोनों का जो मिक्सचर होगा, उससे आप अपने गोल्स मीट कर पाएंगे. देखिए, बात सिर्फ रिस्क की नहीं है, बात है कि हमको जब पैसा चाहिए, हाथ में पैसा होना चाहिए. तो उसके लिए कितना रिस्क लेना है, दैट इज द होल आइडिया बिहाइंड इट. सो यू कैन नॉट जस्ट से कि प्रोडक्ट ए के लिए मेरा रिस्क ऐसा है, प्रोडक्ट बी के लिए वैसा है. यू आर अ सर्टन स्टाइल ऑफ इन्वेस्टर, यू हैव सर्टन काइंड ऑफ रिस्क एपेटाइट. उसके हिसाब से आप इस चीज में कंफर्टेबल होंगे. अगर इक्विटी मार्केट 30% गिर गया, तो आप कैसा फील करेंगे? विल यू पुल आउट ऑल योर मनी? If yes, then probably you might not be the right kind of investor to be putting your money into equity. तो ये सारी चीजें देखते हुए आपको इन्वेस्ट करना है. So there is no one thing. There are a lot of factors which come in together, and you
I
can.
think what you also mentioned very interestingly is that, risk management, risk appetite also is your own mindset.
Absolutely.
ऐसा नहीं होना चाहिए कि आपने losses करे and it takes you down in a spiral. You should be able to rise up from it as well. And also it should be money that you have kept aside and you have thought there is a ratio for it, Kiran, right? What is it called?
No, so there is asset allocation, what we were discussing. So there are different buckets in which you're putting your money, different kind of assets. So there'll be some money in equities, some in debt, some may be in gold, or some would be in international investing. So there could be a spread of things that you're putting your money into, and basis the requirement. जैसे अब हम retirement की बात कर रहे हैं, retirement के लिए पैसा जमा किया, retirement तो 20 साल दूर है, तो market ऊपर नीचे हो रहा है, उससे क्या फर्क पड़ता है? So just stay put, let that volatility be. But if you get so anxious by that volatility that you're not able to sleep at night, or if you're getting health issues, doesn't make sense. So better pull out of it. So yeah, so this is something that you will experience when you go through these products.
I do have some insurance related questions, which is that, a lot of times the companies give you insurance, right? But it may not be enough. At that point in time, should it be supplemented with other insurance policies?
Well, so employer-related insurance, the main issue there is not about sufficiency of the amount that the company is providing. Usually, at a younger age, it's quite sufficient. But what
Right.
happens is, to save on that premium amount, people tend not to take their own individual insurance. Now, it's not like, earlier times where people continue with the same job for a lifetime. So there will be job changes. You will move to different employers. So different employers can have different policies. तो आपको पहले एम्प्लॉयर के पास जो मिल रहा था वो दूसरे के पास शायद ना मिले. तो देन व्हाट डू यू डू? एंड देयर कुड आल्सो बी गैप्स. आप पढ़ाई के लिए बीच में ब्रेक ले रहे हैं, यू टेकिंग अ सबैटिकल, और देयर कुड बी ब्रेक्स फॉर चाइल्ड बर्थ. वुमेन डू टेक अ शॉर्ट ब्रेक एट दैट टाइम. तो उस टाइम पे फिर कौन कवर करेगा आपको? बिकॉज इफ यू आर नॉट एम्प्लॉयड, यू डोंट हैव एनी पर्सनल हेल्थ इंश्योरेंस, तब आपके इंश्योरेंस में गैप हो जाता है. दूसरी चीज ये है कि एज यू एज, देयर कुड बी लाइफस्टाइल डिजीजेस दैट माइट क्रीप इन, and because of that you might become uninsurable. The terminology is uninsurable, कि आपको इंश्योरेंस नहीं मिलेगा हेल्थ इंश्योरेंस के केस में. So it's better to take your personal insurance earlier on when you're young and healthy, and even though you might not need to claim from it because employer का cover होगा, तो पहले आप employer से ही claim करें. Let your insurance continue unhindered, but ये सारी problems आगे चल के होती है which we don't anticipate, when we are covered by the employer and at a younger age. तो ये सारी चीजें थोड़ी सी ध्यान रखनी पड़ेंगी. पर्सनल अपना एक इंश्योरेंस होना जरूरी.
I think एक और point जो आपने mention किया था vis-a-vis longevity, right? Now the average age span is increasing. In fact, there are so many books that are now coming where they help you actually understand that it could happen that in due time the money that you thought conventionally that if you're going to retire at 60, right? And then you are going to use, but now because you're going to live longer, that money is now needs to be invested properly, etc. So this longevity point जो आपने मुझे बताया, उसके बारे में I would like to know how can people prepare ahead in time for a bigger span of living with the help of risk management and their portfolio?
So, see what happens is just take a simple example. We start working at say maybe the age of 22, 25, depending on what kind of education you're taking. तो आप 30 पकड़ लीजिए पहले 5 साल में तो समझ ही नहीं आता क्या हो रहा है. So
True.
by the time you get serious about investing, you are almost 30. So 30 to 60 is the age where you're earning. And if you're even going to live till 90, so 60 to 90, you are without any source of income. राइट तो 30 साल में कमाना है खर्च भी करना है गोल्स मीट करने हैं फैमिली के एंड देन यू हैव टू कीप फॉर योरसेल्फ फॉर द नेक्स्ट 30 years. सो दैट शुड ब्रिंग इन द सीरियसनेस कि 30 साल जब आपके पास कोई इनकम का सोर्स नहीं होगा दैट इज व्हेन योर इन्वेस्टमेंट्स आर गोइंग टू कम टू योर रेस्क्यू. सो दैट इज वेयर योर इनकम इज गोइंग टू बी डिराइव्ड फ्रॉम. तो आप जब शुरू कर रहे हैं अपना करियर तब से कम ऐसा पकड़ के चलिए कि 10% जो है मैं अपनी रिटायरमेंट के लिए डालूंगी. So you have to have that discipline of putting say a fixed amount, say maybe 10%, and keep increasing it as your salary increases. ऐसे नहीं कि पहले साल आपने 5,000 डाला है तो वो आप 25 साल तक वो 5,000 ही करते रहें. You have to keep increasing because your lifestyle increases. As I said, inflation आ जाएगा तो खर्चे तो बढ़ेंगे ही फ्यूचर में. So
Correct.
to take care of that, ensure that certain percentage of your salary is put into funds specifically for retirement. भले वो रिटायरमेंट स्कीम नाम ना हो उसका, पुट इट इनटू अ सिंपल इक्विटी इंडेक्स फंड या डाइवर्सिफाइड इक्विटी फंड, उसमें भी आप डालेंगे तो आपके 25-30 साल में बहुत अच्छा कॉर्पस बन जाएगा एंड दैट इज व्हाट इज गोइंग टू हेल्प यू इन योर रिटायरमेंट. दैट इज हाउ यू टेक केयर ऑफ द लॉन्जिविटी रिस्क बिकॉज पैसा इन्वेस्टमेंट से ही आएगा एंड देयर विल ऑब्वियसली बी ऑप्शंस दैट माइट कम अप व्हेन यू आर 60 की कुछ आप पार्ट टाइम वर्क कर रहे हैं या कंसल्टिंग कर रहे हैं दैट वी डोंट नो उस टाइम क्या होगा, वेदर यू विल बी एबल टू हेल्थ विल सपोर्ट नॉट सपोर्ट, बाकी कंडीशंस क्या होंगे. सो better to be prepared with your own kitty of money and keep the other options open.
Right. Let's quickly take a few questions. All right. Bhavna Bisht is asking, what are your first 3 tops for someone who wants to learn but has minimal knowledge about risk management? How can one proceed in terms of personal finance?
Oh, well, learning about risk management, I don't know where to start because there is so much available. Actually, there's no specific course for risk management. It forms a part of the curriculum I had done my certified financial planner course, so it's a part of that curriculum. I'm sure there is lots which people are learning also in the regular curriculum of BBA and BMS and all those courses that have come up. So there would be that. You could read blogs which are related, written by various financial planners. So there will be certain articles on risk management. So you can read that. That could be the starting point. So and from there on, depending on your interest, you can scout for particular courses which are in risk management. Which unfortunately I'm not aware if there is anything specific that is available for risk management. So I would say that is the way to begin.
Well, that brings me to another question, which is कि अगर मुझे risk management नहीं आता है, तो there are professionals who can help me do that.
Absolutely, absolutely. There are, yeah. So financial planners start with risk management. I mean, after your goals are decided, you start with risk management and then you go to investing.
Absolutely. So, you are covered. Even if you don't know it, there are professionals who can help you. That is also one of the things that you should go back home with today. All right. Ritika Joshi is asking, do you have any advice for a woman who recently became financially independent? What are some dangerous financial risks you often see people take?
Okay, interesting. So dangerous risk, as I said, following the herd. So take up whatever is latest and whatever is giving you the highest return. So put all your money into that, and without understanding the risk behind that. So I think that is the biggest fear that I have, that people just fall into that herd without understanding. Now, for somebody who's become financially independent recently, as I said, uh, first of all, just take care of your insurances, and depending on what your family structure is. So, first of all, your own health insurance. If your parents are dependent on you, take care of their insurances also, because it's more likely that they will have some kind of requirement as they age. Secondly, if there are any dependents on you, take a life insurance as well. Or if you're planning to take a loan for your, say your own home or buying a car, so take a appropriate insurance, a term plan basically, which is a small insurance premium for a larger amount of cover. You don't get anything back if you survive, but that is the beauty of it. That is the reason the premium is very low. So take that kind of insurance. These two things should take care of it. Thirdly, as I said, critical illness and personal accident. If your resources permit, please add them on. Else, as you go along, as the income increases, add them to the insurance portfolio. So that is your risk management. In terms of investment risks, as I said, retirement, if you're very young, you can go 100% equity probably, because retirement is still 20, 30 years away for you. The rest of it, depending on the time frames that you have, you can select debt or hybrid or equity, a combination of the three portfolios.
Wonderful. So we have time only for a few more questions. Okay, how do I know which insurance I should buy first?
Okay, this is very interesting. So, what is going to hit you the most? Just think of it in that way. Yeah. So, what thing going wrong can hit you the most? So, I think the answer to most for most people would be health, right?
Right.
So, if there is any ill health, there will be a large expense. So, better take that health insurance first. Uh, Life insurance, yes, if there are dependents. So if there are no dependents, there are no loans, you don't really need life insurance. So you can avoid that. Then in that case, you can look at the critical illness and the personal accident policies first. But health insurance, I think, is mandatory for everybody. That's what I would say.
All right, let's go to the next question. Krati is asking, what are my alternatives if I can't claim a health insurance for some ailment? How do we build a safety net in that case? Very, very interesting question. Also, from the point of view, that sometimes your predisposition can lead you to an illness, but a lot of times insurance companies also do a lot. They make you go from pillar to post on chote points. So
Right.
yeah, that's an interesting question, Kiran.
Yeah. So, see, there is no sure short way of covering this kind of thing. So, what can be done is there are ways in which you can take an insurance policy that has a co-pay clause. So, you pay a certain percentage. So, if your coverage is for say a lakh of rupees, you have a 20% co-pay. So, in case of any expense, uh, whatever the expense, 20% you will pay and 80% the insurance company will pay. That is one option. Second is you can take a policy which eliminates that whatever ailment is already there. So it's called as pre-existing disease. So eliminate that. Everything apart from that is covered. So that could be another way of taking an insurance policy if the insurer permits. Third, obviously, is you build your own corpus. So if you know that you are uninsurable in the terms of the insurance industry, so if no insurance company is willing to give you an insurance policy because of certain predisposition, as you said, in that
Right.
scenario, when you're investing, keep a certain amount apart aside to take care of your health requirements. So you're building your health corpus separately.
All right. I think we have two more questions to go. I'm keen on investing in crypto markets. How do I follow the process of risk management there? ये बहुत hot question है वैसे.
हाँ, ये hot question है. So frankly speaking, I'm not a big fan of cryptos. So as I said, first of all, it's unregulated. So you don't really, if anything goes wrong, you don't have anybody to any institution to fall back upon. Second, things are still not clear in terms of how and where you are allowed to, not allowed to invest. तो थोड़ा-सा सोच समझ के इसमें रिस्क मैनेजमेंट में पहला फ्लैग ही मेरा डाउन हो गया कि इसका कोई रेगुलेटर नहीं है, तो मैं तो इसमें नहीं पैर डालूँगी। आप सोच लो, अगर आप ओके हो इस रिस्क से, इफ यू आर ओके विथ योर मनी गोइंग टू ज़ीरो, please go ahead. There
I
are,
think,
there are people who are very much in favor of cryptos also, larger like Bitcoins,
right.
you could still maybe try that, but again, that is a risk. So I would not say that I
Yeah.
am very much in favor of that.
I think a lot of people who I have interacted with specifically on crypto, they always say that you should be mentally prepared. कि अगर ये पैसा डूब गया, I can live with it.
Exactly. So that is the thing.
Yeah, that mental makeup has to be there, and also if you have to invest it and then you can sleep over it. It's not like you have to take it out immediately. Then if you're लंबी रेस का घोड़ा वाली बात है कि अगर आप क्रिप्टो में आप तभी जाएं जब आपके पास में आपके पास जिगरा हो कि ठीक है अगर डूब गया पैसा तो डूब गया. And otherwise you just need to be more careful about the timelines, etc. It's very, very new market, so
Very
it's
new market, yeah.
yes. All right. Do we have the last question? Is that the last question? All right. What percentage of my income should I invest in a health insurance?
Okay, very, very interesting, because you are saying investment in insurance. So that doesn't happen. So you're not investing in insurance. It's it's something that you're safeguarding yourself from an unforeseen circumstance, right? So it is not an investment, it will not pay you back anything. It is just protecting what you have created. So there is no percentage or there is no thumb rule कि कितना लेना है. अब आप कितना प्रीमियम भरोगे? So you know, how do you define that? So that comes back to कितने का कवर होना चाहिए. So कितने का कवर होना चाहिए, then you go back to the question कि if you have to be hospitalized, which hospital will you choose?
Oh, interesting.
तो
Those kind of
उसका
step by
कितना, हाँ, तो then these are the steps. So if you are ill, you can go to a municipal hospital, you can go to a mid-level hospital, you can go to a nursing home, you can go to a 5-star or a corporate hospital. तो depending on what is your comfort level, आप देखिए वहाँ पे कितना खर्चा होता है. Go to their websites, corporate hospitals have their websites. देखिए कितना खर्चा होता है. See the maybe something heart disease का कितना है, cancer का कितना है. So those are the larger expenses. You know, based on that you can say कि मुझे 25 लाख या 50 लाख का इंश्योरेंस चाहिए. उसके बेसिस पे आपका प्रीमियम निकलेगा. दैट इज द प्रीमियम दैट यू हैव टू पे.
Well, wow, 45 minutes, Kiran, and we kept talking on risk management. And I hope everybody is, I'm going back very enriched and with all the insights. And I hope everybody who joined in also had the same experience. Thank you so much, Kiran, for taking out time for us and talking to us about risk management. Thank you so much.
Thanks, Mugdha. This was really interesting. Thank you for being such a nice host.
Thank you. Thank you. And again, I would tell everybody that you have to reach out to your financial advisor for a better understanding of your risk management needs and investment tools. So always, always safeguard your decisions by talking to an expert also. Well, thank you, everybody. Thank you, Kiran. Thank you all for joining in today. Thanks.